GM, everybody, welcome back to the channel. Today is Wednesday, the 8th of January. Let's get straight into it. Obviously, emergency update last night, Bitcoin selling off nearly $6,000 yesterday. I talked about the fact that we've come down under the 50 moving average on the daily. We're below the 20-day moving average now again after finding it as a bit of support yesterday. And right now we are at a fairly critical support area. I'll just switch on to the 4 hour. Slightly clearer, we can see we are back at our 618 from our previous swing low to swing high. So I would like to see this area held. We've also got this ascending trend line in play as well, which goes back to early in November. So let's see if we can hold this area. If we don't, we do risk coming down to the 786 on the Fibonacci. That would be the next area I'd be interested in. And if that holds, then I think we will, well, it goes without saying, we will almost definitely come down, retest this low, potentially take out liquidity below this low, and we'll go back to the scenario that I have been talking about is a probable scenario for the last couple of weeks, that we do dip our toes below 90,000 into the upper 80s and then see some sort of reaction from there. If we're just sort of go back over to the daily here, we can see the trend line that obviously I've got in play from early November, obviously coming up, starting to connect with the current price. So like I do say, if we do go lower, potentially this 100-day moving average then becomes the target. This is coming in around about sort of 87,500. We just go over to our other chart with our path here. We can see we're pretty much back in line with the path. So there's nothing to be too concerned about right now. Obviously, we are back on track as per what I was originally looking at, is that some sort of correction comes in after this push up at the start of the month, probably down into around the end of this week. Maybe that runs into early next week, and then we put in a move higher. Obviously, this here is a higher high from back here. Now what we want to see is a higher low coming in. But like I say, what we don't want to do is we don't really want to start closing many candles below this support here. This is obviously the ascending trend line coming in from the highs of the last bull run. And if we go to the weekly, we can just kind of see that. Obviously, this connects both of our highs from the last bull market. So obviously that has come into play. It acted as resistance on the way up. Now it is starting to act as support as we come in and retest. So potentially we get one more retest of this line. Potentially we wick a bit lower. We come lower for a day or two. Obviously this 100-day moving average should start to come up as support as we come into this zone. If we do that towards the end of January, obviously I'm thinking we might come in and retest this zone. If we do retest this zone a little bit earlier, maybe around the middle of the month, in which case we might take a week down to reconnect with this 100-day moving average. Just looking at the futures chart as well, we can see we've actually got slightly different moving averages here. We've actually got the 50-day moving average. Obviously, there is a discrepancy between the futures price and the spot price. So it's the futures 100-day moving 50-day moving average is actually coming up to support around the current low, just above the current low. Probably in a day or two, this will be up at around about sort of 93 to 93,500. Why is that interesting? Because if we go over to this chart, we can actually do a couple of things here and give ourselves an idea of where potential some support might come in. And what I'm going to do is, if we say that potentially we're establishing a new uptrend here, what we can do is we can connect these highs in price. And then what we can look to do from here is we can copy this trend line and we can add it in and connect this low here. So, I mean, if we went down there right now, we come in for around about sort of 93,300, 500, not too far away from that 50-week. Obviously, the 50-week would still be a little bit lower. So I'm not saying that this has to happen, but just in terms of looking at next targets, if we also put on our Fibonacci retracement, we can also see that The 786 is pretty much coming in with that intersection. So we've got two trend line supports. We've also got the ascending channel as well. Plus, we're going to have moving average support sort of coming up very, very soon behind this level. So potentially we come into this level, look to sort of grind things out, make a little bit of a fake out from this trend line, and then start to put the bounce in. That is obviously if we lose this area that we're currently at here. And to be honest with you, this is not looking overly strong. But of course, we can chop around. It will really, a lot will depend on what happens at the US Open. If we see strength starting to come in at the Open, then potentially we can start to pull this around. And this is obviously a candidate for our higher low at the moment. If not, then potentially, like I say, we do come down to around sort of 93,500, 94,000. Maybe that is the next level we go to. And just looking at our liquidation heat map, we can see that we have really been punishing long traders over the last 24 hours, just been taking out liquidity to the downside all throughout the last day. So obviously a big change from where we were 24 hours ago. And obviously we now do have a lot of liquidity sat just above price here. So, if bulls wanted to step in and really push things here and we saw sort of volume pick up, I'm sure the market makers would like to then target those liquidations up there on the short side, and potentially we could make our way back up to the top of this channel if we were able to get out of this. Obviously, at that point, it would be a case of this holding, or they might want to run it a little bit lower and then take that move, and we see bulls starting to step in. So for now, I'll keep saying it's bullish until it's not, in the sense that we've got our sort of higher high. We're looking at trying to put in a lower high as we are at the moment. And obviously, if this does fail, if the 618 fails, just go back to this chart, a bit easier to see because we've got the fibs there. If the 618 fails and then our 786 also fails, then yes, potentially we are going to be looking at lower prices, and obviously prices potentially coming down further into, like I say, probably on the daily, we'd be looking at this 100-day moving average, and we'd come down into the high 80s, which I'm sure would scare everybody very, very much so. I've seen quite a few traders say that this sort of ascending trend line, obviously we got back on this chart. I've heard a few traders say this is a little bit of a line in the sand for them, and if we lose this low, it's going to be much, much lower prices. So potentially, when you have this type of invalidation for many traders, that can often be an area that the market maker will target to really get the market sort of wrong-footed, to get a lot of people looking for lower prices, and then obviously bull step in, catch all the liquidity below these trend lines and start to run higher. So obviously we won't know whether that's going to happen unless obviously we fail at the current price, we fail around 93, and then potentially that will be on the cards. So let's see. It's going to be a big sort of 24 hours, as it always is for Bitcoin, but this feels like probably the sort of trend throughout January, February is very much at stake here. Obviously, we don't really want to see, well, we definitely don't want to see price close below sort of 91,000. That would really be a bad situation for crypto for the first quarter. Obviously, we're looking to hopefully see Bitcoin turn around here. And all I will say is a lot of the time you do see quite these kind of big moves and these scary moves. They almost seem to go one way and then price all of a sudden runs the other way. I've seen it happen fairly often. Before a big move in one direction, you'll actually get a fake, like a head fake in the other direction, and then it'll just sort of turbo run in the opposite direction. So what I'm trying to say is the rate that this came off, it just, it seems a little bit, I don't want to say completely unorganic, but it just seems like, okay, like this is a pretty like rapid, scary candle. What happens now? Is this basically the trigger for then, buyers to come into this market and run us higher when everybody is panicked, when everybody's nervous, when everybody's starting to worry, starting to look again at lower prices? So yeah, trying to keep a level head, trying to stay calm. Let's take it level by level. Let's see what happens over the next day. And like I say, right now, we are at support. If this support does break, then we'll look for our next levels lower. and we'll take it from there. So, like I say, still on track for now, just about sort of holding on by the skin of our teeth. And to be honest with you, it's going to be a similar story for the other majors. Obviously, Ethereum, we said last night, took out this ascending trend line. So really for Ethereum, you want to see Ethereum start to put in a bounce here. It's added 618 as well. So completely similar setup to Bitcoin. Obviously, if this fails, coming down to the 786, potentially coming, filling this wick in, potentially taking liquidity under this wick. If Bitcoin gets down, below 92,000, Ethereum could definitely get below 3,100, come into this zone. Like I say, Bitcoin goes sort of like worst case scenario. My worst case scenario is down, like I say, into the high 80s, mid to high 80s to connect with the 100-day moving average. Then potentially Ethereum does something similar and comes down to 2,800. I think that would be a complete flush out of Ethereum, take out all the sort of longs, all the liquidity for potentially running higher. But like I say, let's not get ahead of ourselves. We'll take one step at a time. Solana as well, coming back below $200. So again, completely sort of flushing liquidity built under this descending trend line that it had broken out of. I was looking for some sort of retest here. That hasn't happened, but we've reconnected with its 100-day moving average on Solana. So I think this is a likely place as any for these cryptos to bounce from: Bitcoin, Ethereum, and Solana. I mean, this is it. Either bull step in here, or potentially with Solana, we're coming back to reconnect with this longer term trend line, and maybe as low as the 200-day moving average. Again, I'd say that's probably worst case for me in terms of Solana, assuming we are still going to be in a bull market, which I think we still are in. And then Pepe also breaking down, probably look for a reconnect with its 100-day moving average, and then largely the next move on Pepe will, of course, be dictated by the rest of the market in terms of what Bitcoin does. I mean, in times of this, when the market's selling off, it's really just all eyes on Bitcoin. What is Bitcoin going to do? How's Bitcoin going to behave here? Bitcoin dominance, interestingly, red on the day, so I wouldn't really expect to see that. It looks like Ethereum is showing some relative strength. Obviously, we are expecting Ethereum to show some relative strength, but it's interesting to see that altcoins are holding their own for now. Obviously, they haven't been over the last few days, but it's interesting that they're holding their own for now. Obviously, if Bitcoin can bounce from here, then potentially that could be the next sort of lower high in Bitcoin dominance, and we could see altcoins get a nice run throughout the rest of this quarter, which I have been talking about. So let's see what happens there. Dollars catching a bid. So we actually had some positive data that came in yesterday. I noticed this tweet just in terms of the macro risk off move taking shape after jolts. These are sort of US sort of job openings figure, and ISM is a manufacturing number that sort of little to help those hoping for a rate cut anytime soon. So the TLDR of all of this is that there's been a risk-off move. We've seen stock markets come down. This is Wall Street, so this is the Dow Jones. FTSE come down. We see the US dollar put on a pump. We've seen bond yields take a hike as well. So what all of this really means is that obviously the market is pricing in less chance of there being a rate cut in January. I don't actually think before this number there was a very high chance of a rate cut in January, but it seems like the chances of the rate cut are super low now. So obviously the market is repricing in real time. It's thinking maybe we'll get a rate cut. Now it's looking like we won't. Remember, we've got NFP job data on Friday. We've got inflation data on Tuesday next week. So some big economic data coming out. And it could be, well, in my opinion, it is that the markets are just really starting to de-risk into that data. They want to see what happens over the next week. Obviously, the Fed has said they will be led by the data. So if obviously we get sort of good job numbers and a higher inflation print, then potentially that's going to put some more pressure on these markets in the short term. Obviously, what we're hoping for is that the NFP sort of non-farm payrolls actually comes in a little bit lower than expected or at expectation. And the same with the inflation number. We don't want inflation to be hot because obviously that could mean that the Fed are going to come in even more hawkish. Potentially, they'll float out the idea of no rate cuts, one rate cut, which would really, really hurt the markets. So I don't think that's going to be the case, but I'm just explaining why potentially these markets are de-risking at this point. So we'll finish off on Bitcoin then. So just to recap, Bitcoin is holding some key levels right now. Obviously, we're back to where we were in terms of our path. Really, we need to hold our current low, which is currently coming in at the 618 for Bitcoin. Let's just get a chart with the fibs on. 618 for Bitcoin, and we've also got our ascending trend line currently acting as support. If we lose that, then potentially we're going down to the 786. And if that fails, then we could be looking at a complete flush of this level and a dip below the 90k level to reconnect with this 100-day moving average. But let's take things one level at a time and see where we are over the rest of today. And obviously we'll revisit all of this again tomorrow. So thank you very much for watching. If you have enjoyed the content, please don't forget to like, subscribe if you're new, and I will speak to you all on the next one. GM.